camera, action! Good afternoon and welcome to another segment of Off the Cuff with Deb. Today I have a special guest with me, Cathy. Thank you so much for joining me today with Fairway Lending. And I have some great news regarding interest rates and not so good news regarding interest rates. And actually I'm going to let Cathy tell you the not so good news, and I'll tell you the really great news at the end of this segment. So you go ahead and tell them the not so good news regarding interest rates.
You got it right. Okay, so interest rates, as everyone should know, interest rates go up, down, all day long, 1, 2, 5, 6 times a day, right? North Korea, that everyone's heard what's going on. What happens is, what does the market do to that? It's how they react to the news worldwide. We're no longer just a state by ourselves. It's not nationwide, it's worldwide. So based on that, the investors then decide, wow, I think I need to do X, I need to do Y. And as a result, then interest rates then decide to, not by themselves, then cost more money to get there. So there's this old song that I used to use and I'm now using, roller coaster, slow down. So basically that's what happens with interest rates all day long. They go up, they go down, they go up, they go down. So you do need a good lender who is trending the market, and then based on that information and the new news that are coming out, then lock your rate accordingly. So what does that mean? Interest rates are interest rates. I do a pre-approval for you for 4.125. I look at the market trends, North Korea, wow, 4.125 cost you money, not par, which means I got to charge you a discount point. However, we go in and we say, hey, labor news is coming out tomorrow. Let's look at that roller coaster, wait till tomorrow to actually lock. That is how interest rates work, because you really do need a lender who is really trending the market, the bonds, so that you can make a decision with your consultant to get the best rate possible.
Yeah, and that's super important, especially now as even real estate markets fluctuating up and down. I could say that that's the same little old thing with real estate. So how it affects you if you're in the market to buy is basically if the interest rates go up, right, and you have pre-qualified them for X number of dollars, let's say 500,000 for a loan amount, then that means you no longer qualify at 500,000, right? Because your qualifications were based on the interest rate that you originally qualified them, unless you lock them, which I know Cathy's real good about, knowing and understanding and having knowledge of the market to know when is the right time to lock, and that's really important. And it's why I use you all the time. She's your, my in-house exclusive lender. Why? Because you know your business, and you're in the business to know your business, and my clients are well taken care of with you. So I appreciate that.
You're absolutely right.
So interest rates today are higher than they were tomorrow, right?
Right. So basically what's happening is, based on what's happening today, I can tell you, right, because the market ends at 5 o'clock Eastern Standard Time. When the market closes, then we can actually lock the rate. We have a certain time frame. Us is 4 p.m. Pacific Standard Time. So let's say I do a pre-approval for you. I personally put a little more into the interest rate just in case
the rate
goes up, because I want to protect you and you as a buyer agent to ensure that this client can still can qualify for this $500,000 loan based on what the market conditions bear.
That's right. So like yesterday, you had some clients that you locked an interest rate, right? Today, that interest rate went up. Had Cathy not locked the interest rate yesterday, then that client would have been locked out of the market today.
Right.
Correct? That's how it would work. So it's really important that when you're in the process of getting pre-qualified, know the market, work with a lender that rides the wave of the market. You get like an app, up to the minute, right, when that interest rate is going to fluctuate. It's going to go up 16 points, if it's going to go up 1 point, if it's going to go down, or whatever the fluctuation is. So you'll know when is the best time to lock that rate. All things considered in the world, because the world news does affect how we're going to respond to the market when it pertains to interest rates, right?
Exactly.
And
so just to interject, when you're pre-approved with a person like myself, what we do is, once you're in escrow, which means you actually have an accepted contract, that and only then can you actually lock the rate, okay? That is when we talk almost every day via text, email, and I'll say, hey, the rate is at this, what do you want to do? Because I did not win the lotto for a reason, because I can't guess that number right. But in regards to trending for the interest rates, I'll let you know what reports are coming in and the benefits that you have for locking today and or waiting to tomorrow.
Okay.
So ride the roller coaster.
That's right.
With Debbie and myself.
That's right, but don't ride it too long, because the consequence of writing it too long is the same thing that's happening today with a lot of people. Because the interest rates went up, if you were currently in escrow and you did not lock in your interest rate, or you were not advised to do so by your lender, you could be in big trouble in the next couple of weeks, because you could have just been priced out of the market because the interest rates now no longer qualify you for the original pre-qualification that you got with your lender. So no matter who you're working with right now, if you're currently in escrow, you need to know the rates that are available in today's market, which, by the way, what is the rate today for both FHA, VA, and conventional?
Right, so everything being said, everyone knows that there's like 6 different items that actually affect your interest rate. VA and FHA is more because it's a government loan, so you could be at 3.75, 3.875, and based on your credit, could be a little higher. And then for conventional, which is a not-for-profit organization, then right now you could be at 4%, 4.1, and again, your debt-to-income ratio, which we talked about in a different segment, also plays to that. And how much money are you putting down? So all of those take into effect. So I can have a 700 credit score and only put 5% down. My rate might be a little higher. So think about it.
Right.
When you go buy a car, no one cares about the interest rate. All they care is about, I want that car and I'm going to get it. And you walk in, I'm only going to pay $400 a month.
That's right.
And at the end of the day, you walk out with the car you want and you're paying $500 a month. So be kind to us. We are working here together.
That's right.
To help you get the home of your dream.
That's right. And before we end this segment, there's one more thing I want to address with you, because we had such an enormous response going live earlier today. And this is in regards to those self-employed 1099 clients. Now, this is a big deal, because back in the day, meaning just a few months ago, you used to have tax returns to help you qualify. Well, if you're a 1099 employee, you're self-employed, you run your own business, and you write off everything, at the end of the day, your tax returns don't show a whole lot of profit. But with this new regulation and this new lending guideline, I think we're going to be pleasantly surprised to find that we can now get back into the market using our bank statements. So Cathy, tell us a little bit more about how that works as it pertains to 1099 self-employed people using our 12-month bank statements.
Great. So basically what this means is that you can continue to run your business the way you have been, write off what you're writing, right, so that you can keep your business intact, because small businesses are really the heartbeat of America, right? So with that being said, unfortunately, I'm unable to help some of those individuals because they write off too much taxes. Let's do easy math. You made $100,000 on your taxes, you write off $70,000, you now only earn $30,000 a year.
That's right.
You don't qualify to purchase a home here in San Diego. But now you have bank statements, 12 months, 24 months, and you show that you have deposits of $100,000, and we need a letter from your CPA or whoever does your taxes stating what your expense percentage is. So easy math, let's say 10%. So that means that's $10,000. That means you earn $90,000 in a year. That means you now should be able to qualify.
Yeah, significant difference.
Absolutely.
Yeah, you're talking about a $90,000 a year income that you can qualify for versus a $30,000 a year income that you couldn't qualify to get a house for. Because oftentimes with self-employed people, it isn't that we can't afford the mortgage payment. It's that we can't qualify to pay for the mortgage payment that we know we're already paying, because we're paying it in rent. So if you're in the market to buy, then let's start with getting you pre-qualified. Let's see what amount you can qualify for, at what rate you can qualify for, and get into the market now, because the rates are going up, right? And the market is steadily going up. We're on an average of 7 to 8% a year here in San Diego, and I don't see any end in sight. So if you've been waiting, if you've been holding back because you're not sure what's going to happen with the interest rates and or the market, give us a call, FaceTime us, send us a message, no obligation, get pre-qualified. Cathy is a great lender. She's very knowledgeable about what she does, and I've been doing real estate for 30 years, and you by far are the best at communicating with my clients and the most knowledgeable when it comes to educating my clients about the loan process. So I appreciate that about you, and I'm happy to refer Cathy to any of my clients who want more information. So thank you, and thank you for joining me today. Thank you for joining us for another segment of Off the Cuff with Deb.